it's not necessarily the heaviest space on the index, but very wide interest on metals. How are you looking at this quarter?
So obviously we come off the really trough levels that we saw, in 2Q for metals. More specifically for steel, there is a price correction that we're going to see in the sector, but should more than be offset by the correction in coking coal costs. So from an Indian steel stock perspective, I think by and large, we should see an EBITDA per ton expansion to the tune of about 3,000 rupees, give or take, across. The wild card for us here this time around is actually Tata Steel Europe. We are anticipating an EBITDA loss over there, almost $90 a ton. So why I say it's a wild card is because, again, that number could be anything. A loss, I think we're more or less sure will probably show up, but, that quantum could be whatever. And the second thing is that 35% of their contracts are annually driven. So, commentary around that, basically what happens in, calendar 23 would be something that we are watching out for. On the, on the non-ferrous side, more specifically, we've basically seen that aluminum prices have contracted, but then at the same time, we've seen, costs kind of come down as well. So to that extent, bit of a non-event in a sense on the non-ferrous side.
Raashi, I was saying, and please correct me if I'm wrong, but I think a day or two ago, I think you and Surendra have gone ahead and changed the rating on the ferrous side. Now, is this the China factor to do with it? And therefore, would you play more, or would you put more importance on the commentary that comes in from the companies about how they feel about this whole China reopen, more than the earnings delivery? How are you looking at it?
Oh, yes, absolutely. The upgrade in the strategy portfolio as well is basically predicated on China easing. Our global team is actually pushing iron ore as a way to expose themselves to this whole China easing policy. We've already seen iron ore move up from like 80 to crossing $120, and we're expecting that to go up further. And when you kind of play iron ore, then that augurs well for steel as well, right? Because if there is a China easing, in a sense, we'll see steel margins expand. Particularly, the steel stocks that have iron ore exposure and iron integration, they kind of do well. So yes, like you rightly said, I think more than the earnings, because the earnings are kind of what we already know by and large, unless there are some massive surprises on the upside or the or downside, either way. But that apart, I think the focus will have to be more on what China actually does, and perhaps more realistically after Chinese New Year. Because as I understand right now, on-ground demand is really bad. It's quite sort of so muted that there has to be some sort of a pent-up let out. And if there is an easing, that will, I think, propel the sector forward.